Happy Halloween. I'm Dan Fitzpatrick here at StockMarketMentor.com, and it's Saturday, October 31st, and I want to talk to you about FitBit. The company reports earnings after hours on Monday, so you got kind of one more day to make a decision as far as whether you want to buy this or not. As I'm looking at the chart, and this is it, we can go to a weekly chart and all you see is this thing compressed, so that doesn't work real well. This is all the data you have to work with. The thing is, the stock has been trending in a series of higher lows and highs, and essentially like lower highs. What did I just say? Higher lows and then lower highs. So we've got a bit of a volatility squeeze here, and the stock is really set up for an explosive move. The challenge is which way. You'd think if there was no such thing as an earnings report on Monday afternoon, I would look at this stock and I would say you want to buy this stock. Volume was higher than average. The stock's been in a squeeze. It's above this 50-day moving average, which it hasn't been for a while. Now, it has been for a while in this little trading box here. So truly, the path of least resistance is up. The stock looks like it's breaking out. This level of resistance here doesn't really bother me. I think it's kind of a canard to think that it's relevant. And the reason is because, yes, we have this. Yes, we have this. 41 is resistance. Don't buy until it breaks out above here. Well, the problem is we've got earnings on Monday evening. So this stuff doesn't matter. The numbers are what's going to matter. And so here's my suggestion. If you're looking to get into FitBit, I think the way to do it is to take a half of a position, whatever your normal position size is, take half. But just make sure that that you're willing to make a commitment to the company. And I'm not saying whether you should or you shouldn't. My role here is not to tell you what to buy or what to sell. Frankly, it's to tell you how to do it, how to execute your decision. So if you want to buy FitBit, look, just a few months ago, this thing was down below 31 bucks. Don't think that it can't go there again if they report dismal numbers. It can. It absolutely can. So you got to be ready for that. You take a small position now and figure, all right, if they report great earnings, I'm sure glad I'm in. Don't have as much as I'd like, but I'm in. Now you trade the stock. If it gaps up a lot on Tuesday morning, you don't want to be buying more, but just be happy that you have what you have. Maybe you even sell into that move, or maybe you just say, you know what, I'm glad I got it at 40.54. I might not even get down to that level, but if the stock does gap and crap a little bit, then I'll scale in. A little bit higher cost basis than I would have had if I had bought my full position here prior to earnings. But you're not thinking about that. You're thinking about the money you could lose. You buy a full position prior to earnings, stock comes down, let's even say to 33 bucks. Well, that's a 20% haircut. And why was that? Because you thought you knew more than the market. You figured you'd get in before everybody on the globe realized what wonderful earnings this company had and that their guidance was going to be great, et cetera, et cetera. Maybe it will, maybe it won't. So what I'm saying is you split the difference. You consider the two sides of risk, the risk of losing a bunch of money because you got in too early versus the risk of not making any money because you got in too late. So anyway, hope this helps. It's the split the baby trading methodology. So hope you have a great weekend. Be careful on Halloween. I think I'll just say it. I think this is the dumbest excuse for a holiday I've ever seen. Walking around to strange people's houses and asking them to give your kids stuff to eat, but that's just me. I don't really like rap music either, so you know where I'm coming from.